Hey everybody, Trendy John here from Simpler Trading. Hope you guys are all doing very, very well. It is Sunday. It is March. Welcome to March. I can already smell the spring in the air here in Florida. It's a beautiful sunny day. I hope where you are is absolutely beautiful and stunning. And I can't wait to get back in the chair trading with all of you, Melissa and I. And as a couple reminders before we get started, we will be doing and hosting our second webinar. It will be this Wednesday. I believe it's going to be 1 o'clock Central, but I need to double check on that. So if you guys did not see the first one, make sure that you sign up and you come and check us out. And so you can see what we are offering here in our trendy trading room. Before we get started here, if you wouldn't mind just taking a few seconds, go ahead and like this video. This is my broad market analysis. I've been doing it for almost a decade. I love it. Without it, I wouldn't know what to do, and it's really simple. I just take a few charts, I put it all together. I talk about some formations, probably some Fibonacci, talk about some catalysts that are coming up in the market, put it all together and give you my overall sentiment. So let's go ahead and get started with this week. We are talking about the U.S. major economic, I guess you could call it news, their events. Basically, what it comes down to, though, is these catalysts or these events, talking heads, FOMC minutes, those type of things, PMI, they're all catalysts that push price to supply or demand. So my job is to be able to teach you, okay, how to identify these levels. And that's exactly what Melissa and I will be doing this coming Saturday. So remember, if you come to the webinar, we have an exclusive deal. Saturday, which is, I believe, the 8th, we'll be teaching for about 3 to 4 hours. And it is a just plethora of information that I believe that everybody should use to get you started on the right path for 2025. So, all right. So, this week's major U.S. economic reports and Fed speakers starting off on Monday. You guys can see that we have PMI. These are Eastern times. And then 10 o'clock construction, spending ISM. We got some talking heads here and some auto sales. On Tuesday, pretty quiet. That means, anytime I think that, or nowadays when I look at here and I see, what I feel like is going to be quiet, I always think like there's going to be this random tweet on X, right? That just causes some volatility in the market. But Tuesday, we have New York Fed President Williams and then Richmond Fed President Barkin. And then on Wednesday, it gets a little bit more interesting here at 8:15 Eastern Time. ADP employment, then we have some PMI, factory orders, ISM services, and then the Fed Beige Book. On Friday Eve, Thursday, March the 6th, we come in with initial jobless claims. And then as we move on down here, you can see we also have some Fed heads speaking. Friday, March the 7th, U.S. jobs report, U.S. unemployment rate. And then moving on down, there's a name that really sticks out for me, and that's 12:30 Eastern Time is Fed Chairman Jerome Powell. All right, next thing I want to be looking at is this week's earnings. These are very important too. These are catalysts that push price to supply and demand. One of my teachings that I'm offering in all 12 classes, so 6 from Melissa, 6 from me, that does not include this Saturday, again, where we'll be speaking to you guys specifically about supply and demand. That does not include that. So you get 13 classes with this year's sign up. So I know many of you guys are very excited about that and looking forward to that. But I will be teaching how I trade earnings. Okay. And we use some supply and demand, and it's fun. When I come to this every week, what I try to look for are names that I believe will move outside of their normal expected move. And I do that by identifying supply and demand, and I look for names that I'm familiar with. Um, and so that's what I want to go over with you really quick. So the names that stick out to me are going to be Okta. All right. I'm maybe looking at that for a trade going into this week. Target. Definitely CrowdStrike. I actually hold this in my long-term account. I got in on that really big dip that they had last year, and it's been awesome ever since. I definitely am interested in this name going into this week. And then as we move down, some of my favorites, Nordstrom, probably not Nordstrom as much as Ross. I love a good bargain, and Ross really sticks out to me, so I want to definitely be looking at that chart. And then on Wednesday, Abercrombie, they've been doing really, really well over the last couple years. Marvel, and then Mongo, MDB, and then moving over here into Thursday, Broadcom, and then Costco's been doing amazing. And then again on Friday, not much going on there. So those are the names that stick out to me that most likely I'll be doing some charting, looking to see if there's any sort of setup for an earnings trade. The next thing that I want to take a look at is going to be SPY, and we like to concentrate on the bigger picture. Matter of fact, I always like to remind everybody what this looks like. I love this trendy cloud, and it's just an exponential moving average, and it gives you a visual. And basically, every time prices come back down into it, it's been an awesome opportunity to buy. Now, my cloud is a little bit different. It is robust in the fact that it has code in it to give me buy and sell signals. May not seem like a big deal, but it's based on structure, based on supply and demand, so it's pretty awesome. What I want to show you though on this particular chart is, the SPY has been above the cloud since 2011. And, you know, look, history tends to repeat itself at this cloud. And you can see it's always been a great opportunity to buy in this cloud. And the reason why I bring it up now is just in case at some point we get some sort of catalyst in the market that pushes price quickly down into the cloud, or maybe over a long period of choppiness that cloud will catch up with SPY, and when it does, I'm just going to be ready to pull the trigger to the upside, for more of a long-term approach, if you will. Now Bitcoin, I'll be going over that towards the end of this segment, if you will. And Bitcoin came into the cloud as well, and I'll show you, and we're getting some really good movement off of that cloud. Okay, so very easy strategy, if you will. Now, I come in here every single week and I give you some quick notes. Some are, a little bit more detailed, some are just straight to the point. Just kind of depends on what sort of week we've had. This past week, after 4 consecutive days down, the bulls came in to buy the dip on Friday at the imposter level. Now, that's what I call the 76.4 on the Fibonacci coefficient. SPY and ES monthly, basically they came in on the SPY 76.4, and I'll show you that here in a second. And then on ES futures, they came into one of my trendy edges, which is one of my indicators that identify supply or demand. In this case, that monthly edge that SPY hit was the demand zone. Price then pushed to a daily inside and down. And again, I'll show you that, guys, here on Thinkorswim just in a second. And then back to the 50 fib. Your two major levels are $599 and $579, so a good 20-point swing. A VIX over 22, take extreme caution going into this week. Okay, let's go ahead and take a look at Thinkorswim. We're going to minimize this, and this is what I wanted to show you. So where did those major levels come from? Well, the first one is this 38.2. Basically, I have anchored the coefficients from this rally here to this pivot here. You'll notice a couple things, all right, is that price did come down this past week into what I call the imposter, the 76.4. That level is at around 584. We got a nice little bounce, but we did not push over the 38.2. Now, why is that important? Well, that is one of your major levels, 599, because what that means, far as trendy Fibonacci, is that we are back above the bull channel of the range that I measured. Okay, so that therefore that is going to be one of your major levels. The second major level is going to be the 88.7. All right, now you'll notice when price pulled back pretty swiftly, it did not come into the 88.7. In my experience, you have an 85% probability once breaking down below the 618 that you will hit this level. It's very rare that we don't, but every once in a while, 15% of the time, it could move, right before we hit it and then we never see it. or maybe later in time, if you will. So therefore, I still want to use this as a major level just in case we do come down to it so that you guys understand. This is where I'd be looking at buying as well. In case this bounce is just kind of short lived. We'll get more in those specifics here a little bit later. The next thing that I want to show you is the daily. And this is important. One, two, three, four, um, five, six down days, and then they came in and hit this level here. If you look over to the left, we do have some demand in here. And once again, it didn't quite get to the structure here. Not a big deal. Again, buyers did swoop in. You can see that price pushed up into the 50, and there is an inside and down formation here, and then we have just a cluster of EMAs in your 50 SMA that's just right above. I would imagine all of this is resistance until proven otherwise. If we gap up into or around the 596 to 599 level tonight or tomorrow morning, my overall sentiment is caution on the open, as you would be opening into resistance. Now, if we open above this 38.2, then I would use this as your support and look to ride it for just a couple more dollars. But I do believe that somewhere between that 596 and all the way up into 600 would be resistance. And the reason why I say that, we have the weekly trendy edge here. Okay, and as I also pointed out, we just have a cluster of EMAs in that 50 SMA. So the idea is they're all resistance because prices under them. If we gap above them, you can use them as support. Let's go ahead and move on now. We're going to take a look at the cues, and we're going to look first at the bigger picture, go over the notes very quickly. The cues are the same way. Listen, the cloud has worked for many, many years. The only difference is that you'll notice that the quarterly candle right now, um, and again, these quarterly candles do not close out for another 29 days. This one's inside. So it's an inside candle at the moment, and it will continue to be an inside candle as long as it stays below 513. Okay. If price goes back above 513, what happens is that you continue the trend of what I call continuation candles. So these are all continuation candles to the upside, and they tend to look like this, as you would expect. But right now, we are on an inside candle. Now, again, it seems a little bullish in the market currently, with some of the talks that happened over the weekend and so forth. But again, let's let price be king, and we'll take a look at that once the futures open tonight, which we'll be going over future charts here just in a few minutes. The next thing that I want to show you here are just the quick notes that I wrote down. A lot like the SPY, after 5 days down, bull stepped in on Friday for a nice relief bounce. There's a lot of room for upside in the relief bounce. Price could see 514 before price finds itself at resistance. The two major levels are 514 and 501. Currently, this is in the inside. Oh, yeah, the quarter is in the inside candle, and that's what I just went over with you, and I apologize. Let me change that on my quantity. Not sure why I would put something like that, and it looks like I kind of messed up here. So this needs to be an R. There we go. All right, now we're good. Now let's go ahead and take a look at Thinkorswim. Let's pull in the cues. All right, so we're going to take a look at the cues here, and on the weekly, okay, nice little pull back. It actually took out the lows over here. It's still in the cloud, which means, I would expect a little bit of choppiness, still some volatility for sure. I don't think volatility is over. Your two major levels right here at 519, and then down here around the trendy edge, which is around 501, as I was saying earlier. Okay, so I'm using a trendy edge, not a Fibonacci, and up here I'm using a Fibonacci. Okay, now let's go into the daily so you can see what that looks like. Nice swift sell off, nice bounce here on Friday. But what you'll notice is that there is an inside and down formation that is confluent with your next Fibonacci. When applying your Fibonacci's from the pivot high to the pivot low, now we're looking for the move to move up. This 38.2 and 23.6 represent a bear channel. And if you watch my video there on YouTube, how to approach a down day, we talk about relief bounces. And this relief bounce itself could push us all the way up towards 514 to possibly even 518. Just like SPY, I think if we gap up and we gap up into this area, and you notice that on the daily, that price is touching the inside and down, the 38.2 and the cloud, then I would say take caution into the open. If for some reason it's such a beautiful bounce and we're up and over all of that, then we would use that as support. But I would imagine on a gap up, they're going to gap us into resistance. We'll be talking in the morning, obviously, before the market opens to discuss where price is and what I'm expecting there. Okay. All right, so let's go ahead and move on. The next thing that we want to be looking at is going to be the dollar. Okay, so we're going to go back to trading view here. You're going to type in DXY. I'm going to show you a couple things. We don't have to use a quarterly on this. We'll go to a weekly. You'll notice that price has really taken, action at the supply and demand zones, just like we teach, right? Our job is to identify where we expect big pivots in the market, and we do that by aligning ourselves with the bigger money. We're going to be showing you how to identify these zones on Saturday. So again, I'm looking forward to that. This demand zone, notice that dollar goes bid here. Things start to move up. You find a little bit of caution. We hit supply. The dollar drops in January. January is a great month to trade. And then we get to demand zones, and then things start to get a little bit more choppy and volatile. Well, that's what's going on right now in the market. Now, a couple things here. The dollar definitely looks like on a weekly and a daily that it could break out from here, but it may be short lived. We still have an inside and down formation here. And if the dollar were to pop a little bit, I would expect 108 to kind of be resistance until proven otherwise. Now, notice we're also just right above the cloud. So if I were looking at any sort of stock here, I would tell you, hey guys, I'm pretty bullish as long as we can stay above this cloud. So that will be an area of interest. The next thing I'm looking at is the daily. You'll notice that we are also breaking up and over the cloud. Same thing. It looks like it could break out from here. But if you could look up and to the left, we had the inside and down formation. That is again around the 108. So in here, I would expect a little bit of resistance, and then we could see a move back down in the dollar that could bring it back down to 106. I would say take caution in the market. If we start to bid over 108 and a half, then it probably turns a little bit different. Maybe the gap up gets sold off because we've opened up into resistance and those type of things. But again, price is king, and we'll assess that tomorrow morning. Let's go ahead and move into the 10-year Treasury, the 10-year, which is TNX here on TradingView. It's doing exactly what I've said that I am expecting. I said technically I see this moving back towards 3.8 and below into June and July. For now, caution is warranted in the overall market if we see above 5.00. Well, it's if this and that. So 5.00 is pretty far away, but also if the TNX continues to drop and it gets closer to 4.18 to about 4.1, take caution here as there's a lot of divergence being created between the TNX and the cloud. So just imagine, if you will, let's say we gap up, this moves down a little bit. There's definitely some room here where we could start to see the TNX get a little frisky. The dollar starts to bid above that cloud, and then I think you see the market basically chop sideways to down. Okay, so that's what I'm looking at on the TNX. Now we're going to get to the skew, one of my favorite things. And as a disclaimer, all of these little, like the TNX, the dollar, the skew, all of this is used in trading for me. but we don't necessarily make a choice just because of one of these. That's why I do the broad market analysis. It's a combined effort, if you will, of all the things in this broad market analysis where I come up with my overall sentiment. So we're not quite through this entire broad market analysis, and we can't make a decision just based off of one of these. But what I will say is that the skew is still, and you want to look at the skew on a weekly, by the way, just like that. And it's still at 157. It's about where it was when I did our last broad market analysis. And this still would point to you need to be cautious here. But the new caution, the caution is the new normal. As I explained last week, we just basically are sitting up here in the nosebleed section. If you go back and study the skew since the inception, anytime we were to get above 140, 135, it was time to be careful and buy puts in the market. And it was just not, it wasn't about if, it was when, and it would typically play out within a couple weeks and your puts would be profitable. Well, here lately, it would have been profitable. So if you're watching this last week or the week before, your puts would have paid you, but it's not like this long drawn out type of trend to the downside that's lasting weeks or even months like I've seen in the past. It's like, hey, if you weren't there, then it's forcing traders to get sort of spooked at the bottom, and you're probably seeing things rip, and then you're like, man, I bought puts right on the bottom. So just remember, something I like to teach our group is like, don't buy puts when the market's down. Buy puts when the market's up at a level of supply or something that you deem necessary as a resistance level. And look to buy calls when the market's moving down if we're in a solid demand zone and the things that you look for. It's just a better overall risk to reward. It's not a guarantee that you're going to make money, but I just would much rather do, calls when the market's going down, puts when the market's going up. And puts are a form of insurance for the market. And we don't want to wait for the storm to come over our house. We want to be looking in the horizon. We want to be able to see the storm coming. And that's why this is broad market analysis is so smart and so fun to use for me. All right. So, on that note, let's go ahead and once again, if you would just take about 3 to 5 seconds, please hit the like button. I really, really appreciate it. Thank you so much. All right, let's go ahead and move on. So, what does 157 mean for us? It means, look, there's still some caution out there. The dollar looks like it could break above and maybe move just a tad bit. Um, but, on the other hand, there is also room for the market to still continue to push up. I gave you those levels, which means, the skew can push up even higher. And as it starts to get higher, we start to bring in a little bit of caution. So I would monitor the skew this week. And if we start to get back over 170, then definitely for me, I would start taking some of my profits off and moving my stops up. But that's just for me. Okay. All right, moving on down, the next thing that I'll be looking at is the fear and greed. So let's look at the fear and greed index. It actually had moved down 3 points, even though Friday was a nice bounce. There's more fear in the market. So again, it was at 23. Now it's at 20. The idea is that the majority of participants are on the put side, and when that happens, the market will typically, how like if everyone's on the call side, they'll pull the rug. Well, it's the exact opposite. And again, you don't just come in here and go, hey, the fear and greed is at 20, so I'm going to go long. That's not how it works. You need to look at these levels and assess and go, okay, it's a good time to buy and so forth. All right. Moving on, let's get to futures, one of my favorite things to look at and kind of close out the broad market analysis, and then we'll do Bitcoin right at the end. Okay. So let's get over here. I get this question a lot. John, why are you using, in this case, I'm using the ESH25? That's because when we have a rollover, things get a little wonky on the charts. Like they don't add up. Like the ES chart might be 60 points above what the front running month chart is. And because of that, I decided last rollover to use the ESH25. It just made more sense to me. I like the structure on it. And it just works. Okay. And it's not a big deal. So when we have the next rollover, which is coming up pretty soon, I'll assess then if I want to use the next contract or if I want to just use straight up ES, but don't be concerned about it. Still, you know, still actionable, could still trade off of this and so forth. But anyways, let's get to the weekly. We'll talk about it. It looks a lot like the SPY. We hit supply. We have honestly, we've done zero. We really have. Like this market has been about understanding where your demand zones are, get long. We're low on the curve. You're looking to get long, cool. Prices push up. It gets up to the high end of the curve. Look to pull your stops up. Look to get short, or just look to kind of, be patient for another dip and then buy again. So you can see here that we have been absolutely sideways since since late 2024, and not much has changed. So we are just simply trading within a range. And again, high on the curve versus low on the curve. When prices come low on the curve, you got this little box and you've identified the tops and the bottoms. You look to get long. It really can be that simple. And as you get closer here, you take out profits and you do this again and you make a higher low and then you come up, make a higher low. That's all that's happening. All right. So at some point, this is going to be explosive if we could get up and over, the highs this year and actually create a base above here, then things will look really, really good. Or things will look really good as well if we can break down and get a little bit further to the downside to create some range in the market. What I would really like to see is something like this. Okay. So let's get a formation and, let's just say that, since late 24 to 25, that, that range has been somewhere in here. Okay. So that box that I just showed you, what I would really like to see is a bigger breakdown to the downside to create a nice playing range for trading, right? Because then you have a lot of room to work with. Right now in this box, I'm not saying it's not a lot, it's several hundred points, but it's actually not as big as we'd want it. So it's fun and it can be fun, but it's also just volatile and really in a tight spot. Whereas like this, if you could imagine, if this were to break down, I know I'm using green candles, but if it were to do something like this, shake a lot of people out. We get in at a demand zone, and then you got all this room to run. I love this type of stuff, and then you could have a powerful, into 2025 and so forth. But I'm also definitely open. I'm a bull by nature. Um, I'm also very open to what if we get up and above the highs and create that base there, right? So the weekly just really paints the picture on the ES futures that we're just completely sideways and trading within a range. On the daily, here is the zone. I want to show you two different zones, inside and up, creates this big green zone here. Friday, we did come into that. This is not the first time we've been here, though. We came here right there, right there, right here. This was January. This was really fun. This is where I did my best. And then February got, it looks like that. And then we came right back down. What I want to be paying attention to in here is, did we make a higher low in the zone? And we did. And that's a positive thing. If we come down and we create a new low, again, I would be really cautious here, as they're probably looking to take out these lows and maybe create that range I was talking about. All right. Now, a lot like the SPY, notice where ES futures stalled on Friday. This gray box in this area, it's the same way. You got the 50 SMA, you got a bunch of EMAs, and they're all stacked up and they are confluent with an inside and down. So if we gap up into or around this yellow and red dotted line, I would expect resistance here. But again, if we open up and over that, we can use these lines as support. Always the trigger, longs, the resistance, short trigger, they're all there for reference, but I don't necessarily just take the trade because we hit that. I'm teaching and showing you guys how to execute that off a smaller time frame. Okay. Let's go ahead and move on to the 4 hour. We're using the same charts that we've been using for quite some time. Notice that again, lower on the curve. What I love about this, it really shows you the value of the trendy edge. And we know that. We see this a lot in the room. This is nothing new. Price came right into the trendy edge. I actually executed my SPX call positioned perfectly for here. The only thing is that I did a butterfly that was 50 wide. I thought it was pretty inexpensive. I bought all the way up until Friday, and then by the close, next Friday, and by the close of this Friday, it moved so damn much. Uh, my front wing and my body were already in the money by just a couple points. That body was, and I'm like, oh my gosh. Like I could have just bought that 50 wide for or for that day or even Monday. But I didn't expect that kind of wild move into the close. I don't think a lot of people did, but it was great. It was beneficial. Melissa has some amazing trades here in the room, which again, guys, make sure you come and see her on Saturday. She's student to star. That's what I always say. She's grown her account 7 times. She grew her account 20+% just in February, which is pretty damn amazing. And it was her first time in many, many years that her February turned out that amazing. So I'm just really, really happy for her and happy that you guys are in a room where we can teach you the same kind of process that you could also repeat. Okay. Anyways, that edge worked really, really well. We're using the same zone. Like I said, I think we're stuck in this playing field for now until we're not. Let's go ahead and go into the NASDAQ. Same thing over here on the NASDAQ. I'm using the H25. Let's get to the weekly. This is what it looks like. Same thing, folks. Just in a big channel. Not a whole lot for me to really talk about, except for notice that there is structure on this chart. There's an inside and down formation right here, and I would expect that to be resistance until proven otherwise. Um, yeah, I mean, instead of going through the whole thing again, I would like to see some sort of big range created before we move on. Either we need to create a base above the highs, or we need to break down further towards 19,000. So that's what I'm looking at. But big picture, far as like what I have anchored my coefficients on, right here, sorry, the 618 is your golden Fibonacci, and a lot of times, if the trend is going to hold, we are not going to break below this level. If we break below this level, super, super cautious, big red flag, be careful on closes underneath that level. But far as like this week, I wouldn't expect prices. Um, well, the two major levels in the futures that I would use is this 20,250 all the way up here to 21,620. Okay, so let's move on to the 4 hour. Same charts as last week. The only thing that I changed on this is I brought down the resistance and the short trigger. Same thing. If we gap up big, I would expect resistance in here. Your buy trigger zone here for last week worked really, really well. So if you took advantage, congratulations. And then as I move over here on the 4 hour, this is also working very, very well. These are the same levels I gave you for the last several weeks. And again, we're just kind of in that sideways box, if you will, that channel. All right. Let's go ahead and move over to Bitcoin. A lot of traders. You should be excited. This is actually up. Let me look at my Robinhood account right now. But again, it's super early, so you never know. Give me 1 second while I pull this up. Yeah, I mean, this is going absolute ham, guys. We're up almost 10,000 points in the futures. Holy moly, cannoli. Wow. That's what I'm talking about, baby. Uh, I love this. We're up almost 10,000 points. Jeez, we're at 95,000 right now. Okay, so let's get over here and I want to show you what happened. Um, I wanted the green zone. We came close enough, right? John Carter, right? We all know John Carter. Don't be a D for a T. If you don't know what that means, don't be a dick for a tick. Look how close I got to my green box here. But one thing I noted here with our traders last week is that we came into the 9 EMA and you could definitely see a bounce there in crypto. And that's exactly what you're doing. If you think about it, we came all the way down to 78, it looks like, right? And some maybe a little bit. And now we're all the way back up here towards 94,000, right? Same thing. And I don't know if Bitcoin is, showing you where the markets are going to open tonight, but if the ES, the NASDAQ follows suit here, holy moly, We could have a really big gap up, and that gap up, I am going to say 85% will push you right into that EMA cluster and that 50 SMA. So if you're not long, which my portfolio, my net liquidity is primarily long, if you're not long, and you're sitting on your hands, you might want to be patient on the open. Patience, again, that's perspective. That could be 5 minutes, that could be 2 hours. Everybody's a little bit different, but I'm going to, and Melissa's going to coach you and walk you through just like we always do. So make sure that you are in the room, ready to rock and roll 30 minutes before the open. I can't wait to see you guys. Have an amazing weekend. Don't forget to like this video and share with somebody that you like. And I can't wait to see you on Wednesday as well. All right. So see you at the next webinar. Everybody have an amazing day.